PAM versus copy trading. What is the best? What is the lowest risk? What is it you should start with? Okay, let's dive right into it. First off, a disclaimer, I am not a financial advisor and the content of this video is informational purposes only. Nothing in this video should be construed as financial advice. It is only a discussion of various topics. You yourself are fully responsible for all decisions you make based on the information presented. And with that being said, let's get into it. What is a PAM account? PAM stands for Percent Allocation Management Module, also known as Percent Allocation Money Management for the easier languages. Okay, it works in a really simple way, and this is why we love PAM systems. Number one, you create a trading account and you make a deposit. Number two, you link your account to a manager or a trustee. And number three, everything is passive. If the manager wins, you win as well. If it loses, you loses, of course. Positives, it is completely free to start a PAM investor account. You only pay a profit split after you have already made money. If you don't make money, you don't pay anything. It's completely passive. Trading takes a lot of time, but you set up a PAM once and it trades all for you on your behalf. It's very easy to start. The minimum amount is low, often as low as $500, and it takes under 10 minutes to set everything up. It's usually lower risk as well. Risk is subjective, but if you're completely new, maybe it's better with a manager than trading your funds yourself because trading involves risk. It's super important with public results and track records, and it usually acts as a fund because all the money get pooled, right? So that was a PAM. But what is copy trading then? This is how it works. Copy trading, you create your account and you make a deposit, just the same as a PAM account. But one of the main differences is that usually you follow a private trader. This usually is more risky because you have no idea who the trader is. Of course, it's usually a public leaderboard, but these track records are usually much shorter than a good PAM system. Number three, you choose the risk yourself, and this requires a little bit of knowledge. If you don't know how to do your risk management, it can be easier with a PAM. And number four, you can change trades along the way if you wish to do so, which means you can close positions, you can open more positions, you are in control of your trading account. That means that you can also make mistakes, which you don't want to do if you're a complete beginner. The positives here as well, it's often free. It depends on where you do your copy trading, and it is a profit share or a service fee. It's completely passive as well, but you can do stuff yourself on top of it if you want to. It's less easy to start regarding copy trading instead of PAM. It is simple, but sometimes it needs more capital to make sense because the margins are on your own accounts. Let's take an example. If you do $500 deposit with a PAM, it gets into a pool which trades by a manager. But with copy trading, let's say you do a $500 deposit, it is in your locked account, which means that if a copy trader opens, let's say 10 trades, maybe you don't have enough margins to open all the 10, and then your risk management gets worse. And it is so important to follow the right ones. If you follow the wrong trader, you'll lose all your money very quickly, and this depends on trust. So who do we really trust, right? Number one, we have to look for a public past results or a good track record. I have a question for all of you guys. When you're researching these kind of things, why is it so many people claiming on their social media, we have been trading for 5 years, but they only have a track record for the last 365 days? Why? This is so important because usually they blow accounts, they start a new one, they blow accounts, they start a new one. And blowing an account means that you would lose all your money invested. Number two, follow someone who wants you to make money, right? They want to serve you. Most platforms profit from you losing. It's so important to do research. Follow people who want you to win and follow platforms who want you to profit. Number three, it's easy to look good online. Cool rental cars, vacations, lifestyles, it does not necessarily mean they are good at what they do. They're good at business, but business can be to sell bullshit as well. So be very careful. How to start? We get a lot of questions about where to start. As mentioned, we're not financial advisors, but we still think it's better to send people to platforms with a good reputation than to leave them wandering all alone in the dark. That's why we have a couple of links in the descriptions. It's so important for you guys to actually stay educated in the field and invest in a system with trustworthy repetition, and also go for the ones who is not going to blow your account within a month or 6 months or the first year of investing. We have a PAMM system that have been running for 4 years straight. They have almost zero drawdown. They have 11% drawdown as the maximum, which is super, super conservative. And that is why you should definitely watch this video. You should definitely subscribe to the channel. We're coming out with a lot more content such as this video. The quality is becoming better and better, and you should definitely watch out this video in order to know a little bit more about PAM systems and passive investments in the Forex space.